Today on Seat 11A, we are joined by Joerg Hoffmann of Wacker Chemie AG to present the company's latest financial results. In this presentation, investors will receive an update on Wacker's recent performance, key developments across its core business divisions, and management's perspective on current market conditions and the outlook ahead. We are very pleased to have him here today. Joerg, the floor is yours.
Hello, everybody. Welcome to Wacker Chemie AG. My name is Joerg Hoffmann. I'm the head of investor relations at Wacker, and I'd like to walk you through our Q1 26 conference call. Something was different this time around because we had an ad hoc pre-release of our numbers. It turns out that the first quarter was far more successful than we had expected. We were like 18% above the midpoint of our guidance for the quarter. We had guided to an EBITDA between 140 and 160. We ended up at 173. So a lot of what we say today will be about those pull forward effects that shaped the first quarter. So let's start with our presentation. Well, here's a message from our lawyers. What we see up front is a battery testing panel for thermally conductive silicones, where we just built a new facility in Japan. As always, the silicones, with the customers, very close to the customer, and tied into their R&D and continuous improvement processes. So here's the highlights of Q1 26. Financials, sales was somewhat lower because we had significant adverse effects from currency. Operations, our restructuring program is well underway. Negotiations with the works council are not finished, but the other parts of the program are moving forward. We continue to target savings of over 300 million until 2028. And also the first quarter showed already first signs of support from the restructuring. Sales ended up at slightly over 1.4 billion. EBITDA, as I said, over 173 million. As you see, significantly higher than last year. And net income, positive income for a change, 15 million. Net debt went up slightly, largely due to working capital effects from a seasonal increase in sales. In chemicals, saw a massive pickup in orders in late March, so last 2 weeks of March. We were literally swamped with orders. Probably a lot of this was motivated by security concerns following the Middle East crisis. The order book entries remained rather volatile till the end of the month and kind of dropped off in early April, but we'll get there in a moment. On polysilicon, the semiconductor demand remained very strong. Our new etching line performs to spec and is actually better, and we've strengthened our leading market position here. As always, we always try to point to sustainability. Here, the issue featured is what you saw on the front page for the production facility for thermally conductive silicones. So let's move on. Following the surge in profits in Q1, that was rather unexpected when we published our guidance on the 11th of March, and 2 weeks later, things were totally different. So we increased our sales guidance for the year, the full year, moving from low single digit to high single digits. We've announced price increases in late March in both silicons and polymers to address rising raw material costs, also a result of the Middle East crisis. But considering the ongoing uncertainties from this conflict, we don't know if the rising raws and our rising prices eventually will lead to delays, customers waiting, or outright demand destruction. And with a continuing volatile order intake, we felt safer keeping our guidance where we had it first from the start. So we still look at a full year guidance unchanged in range of 550 to 700 million. With a consensus was right in the middle of that. But please note, while this is now somewhat taking into account the crisis in the Middle East, this also does not include impacts from changes to the polysilicon trade policies. As a reminder, the Section 232 on polysilicon in the US is in full swing. We would expect a resolution at the end of the second quarter, maybe end of July. Nobody really knows, but that will obviously have an effect on our outlook of the business. So let's move on. Here's the P&L. What you see here is that the gross profit moved up significantly. That's a clear sign of our cost restructuring activities, and obviously also of higher fixed cost absorption. EBITDA moved from 8% to 2.3%, and EBIT from a negative territory to 3.7. Still not satisfactory, but on the way. What you see in the bottom right is how massively exchange rates affected our sales number. Financials, our equity ratio is at 45%. We saw a bit of an increase in net debt, and we'll talk about that in a moment. In silicones, sales were below last year, but profitability was up significantly. And that has largely to do with effects from the PACE cost program. Order intake, as discussed previously, improved massively on pull forward effects in Q1, and we announced price increases at the end of Q1. So here we've updated our outlook, essentially saying that sales will move up, but that we're increasing prices to offset cost inflation, and then margins should be slightly above prior year. So it's not a significant upgrade in EBITDA margin, absolute, but rather follows the overall sales number. On polymers, a similar situation. We've had benefits from the PACE cost program and year-over-year lower raw materials. Price increases announced at the end of Q1. Also here, strong demand, high order intake, not as extreme as in silicones, but noticeable. Please note the construction industry is still in the doldrums. So we were doing pretty well here. EBITDA moved up a third from 37 to 50. And also here, similar kind of update for the full year numbers. Sales up, but EBITDA not meaningfully changed. Biosolutions had a unique quarter in that there were a number of project completions that we had expected to close either in Q4 or in Q2. Both were pulled forward and delayed. So you have a double-digit EBITDA result in Biosolutions. Doesn't change our full year outlook. It's kind of borrowing from the second quarter, which is actually a theme that we think might be something about the second quarter overall. So the first quarter borrowed from the second quarter, but we're getting there. It's slow, but we're getting there. On Polysilicon, well, that's a place where our outlook guidance is unchanged. We're still looking at about 100 million euros, despite significantly lower CO2 cost compensation, or a way to put this is higher energy costs. Solar literally remains challenging, and it's not, people are kind of on the sidelines until there's a resolution to the Section 232 uncertainty. So let's see where this goes. And I have a feeling that our outlook is different, but will change after Q2. Let's look at net debt. So cash flow from investing slightly more than what we accounted for because of payment terms, but still very manageable. And we deliberately increased our net debt to give us more wiggling room in times of the crisis. So when we look into the first quarter, we can say that the first quarter at Wacker was shaped by a surge in orders in the second half, and by the successful start to our cost restructuring program. As I said, negotiations are ongoing. We expect more. We expect savings of up to 200 million already in the first year. The first quarter saw probably some 40 million of that. So the pro rata savings are only going to go up later in the year. The pull forward effects probably boosted EBITDA by exactly the amount that was the difference between our midpoint and the guidance and what the actual outcome, so about 20 million. Looking into the Q2, which was a major feature on the call, although we typically don't guide at this time to the quarter, we typically only do that the full year when we are disclosing our annual report just days before the quarter closes. We can say that the order intake did not stay at the high level that we saw in late March. It dropped back to the level that we saw in January and February. It is still highly volatile. So this gives us uncertainty, and I think with our guidance, we're addressing that uncertainty. Thank you very much for your interest in Wacker Chemie. If you have additional questions, my contact details and Scott's contact details, we'll be happy to chat with you. Again, thank you, and we'll see each other again at the next quarter. Bye-bye.
Thank you, Joerg, for guiding us through Wacker Chemie AG's latest financial results. For investors, the key focus now will be on demand trends across end markets, pricing dynamics, and how Wacker positions itself through the current cycle while continuing to execute on its long-term strategy. You can find this video and many more management presentations from listed companies on Seat 11A. Thanks for watching, and we look forward to welcoming you back soon on Seat 11A.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.